Welcome back. Toronto home sales rose for the first time in 5 months after the Bank of Canada eased borrowing costs from multi-decade highs. The number of homes changing hands rose 4.2% in June compared to the previous month. That's the first monthly increase since the beginning of the year in January. For more on the latest numbers, let's bring in a familiar face, Jason Mercer, Chief Market Analyst at the Toronto Regional Real Estate Board. Jason, thank you as always for coming in. So the takeaway here is that buyers were more interested in transacting with that small notch down that we had from the Bank of Canada, which was reflected in prime rates and mortgage rates. But the TRREB believes that a lot of other buyers are going to continue to wait for further Bank of Canada rate reductions.
Yeah, and depending on the metric you look at, I think you're right. We saw a little bit of momentum between June and May on a seasonally adjusted basis, but at the same time, if you look at sort of levels from previous years, we're still off by quite a bit. And so that suggests that while there's a growing number of people who are considering moving back into the market because they see that the Bank of Canada, is now on a bit of a downward trend. Certainly, a lot of those cuts are likely going to be weighted more towards 2025. And so especially if you look at that first-time buyer segment of the market, I think they're looking for a little bit more relief until they start pulling the trigger on a purchase.
Yeah, and how many rate cuts do you think these would-be buyers want to see?
Yeah, and we were asking that question at the end of last year in conjunction with Ipsos, and particularly looking at that first-time buyer segment. Because if you think about it, there's a lot of renters right now who don't want to spend $1 more on rent. They think that they've reached that sort of precipice where it makes sense to take a hard look at the ownership market, but they're saying they need to see somewhere between 100 and 200 basis points of relief. And I think that is in the offing, but probably more so as we move through 2025.
And what did we see in pricing? What pricing moves did we see?
Yeah, so again, on a month-over-month basis, seasonally adjusted, prices edged upwards a little bit. But then if you look at on a year-over-year basis, we're flat off by about a percentage point. And so again, there's quite a bit of inventory in the marketplace right now, and so people who are active, have been able to negotiate pretty good deals for themselves. And so even as we start to see more people coming off the sidelines in the months ahead, that's going to provide a bit of a buffer to prevent against an immediate sort of uptick in pricing.
And what are we seeing in the condominium market? There have been some headlines suggesting that condo prices are under pretty heavy pressure, and that it's becoming increasingly difficult to sell a condo.
Yeah, I think if you look at that segment of the market, again, it's really weighted towards first-time buying activity. And we haven't seen a lot of that over the last couple of years because of high borrowing costs. And so while we are seeing quite a bit of inventory right now, I think we'll start to eat into that as these first-time buyers move back into the marketplace.
Every time you come on, we ask you for TRREB's view on how governments are doing at addressing the housing shortage, how they're doing at getting more homes built, or at least laying the foundation for more rapid home construction in the near future.
Yeah, I mean, and credit where credit's due. I mean, all three levels of government are say that they're focused on housing, and we've seen a lot of policies come online to support that view. But at the same time, our concern is that given the level of inventory right now in the resale market, which will be temporary, that shouldn't give policymakers pause to say, hey, we can take the foot off the gas a little bit and in terms of bringing more housing online. We need to see that construction, because all the while we've been impacted by high borrowing costs. We've been seeing record levels of population growth, and a lot of that's been focused on a tight rental market. But I think that's about to change as we move through 2025.
Where is the need the greatest in terms of the type of housing that needs to be created?
Yeah, I think it's a fallacy to just look at home construction in aggregate. You also have to think about the diversity. And one thing we've talked about in the past is that we have a lot of people that are kind of stuck in their existing home because they don't feel that they can find something that better meets their needs in their neighborhood of choice. And so we also need to see a greater diversity of home types, and that's that sort of missing middle that we've been talking about, bridging the gap between traditional single-family homes, singles and semis, and that condominium apartment segment.
And what about rental housing? I guess that's not strictly within TRREB's purview, but what about rental housing? How is there a greater need for that? I would think there is, and how do you get that spurred?
Yeah, it's interesting. I mean, if you think about the rental stock in the GTA, it really hasn't grown on net over the last decade, but for investor-held condominium apartments. And we see a lot of
Right.
those types of rental transactions through TRREB's MLS system. But that supply can be in flux at the whim of an investor owner, whether they want to put the unit up for rent or whether they want to sell it or live in it or what have you. So on the other side of the coin, I think we really do need to see an uptick in purpose-built rental construction, and we have seen that over the last year. And so providing that continues, that's a good sign for the rental market moving forward.
Ontario has set the target of 1.5 million more homes over the next 7 years between now and 2031. Is that realistic?
I mean, if you look at current starts and completions levels, and even further back in the pipeline at sales, things are pretty slow right now, and so we will definitely need to see an uptick, and that starts at the pre-construction sales center. And generally speaking, that sort of the resale market leads pre-construction home sales, and so once we start to see activity pick up in the resale market, we'll see more people looking to purchase a home at sales centers.
And is 1.5 million new homes over the next 7 years, is that a material number in terms of easing the pressures that we now see in the housing market?
It would go a long way to, number one, account for the housing supply deficit that's built up over the last decade, and account for the record level of immigration that we're seeing, and people focused on the GTA in terms of settling down.
Jason, as always, thank you.